Good morning. It's Monday, the 29th of April, and this is Govindraj Ethiraj, broadcasting and streaming in transit right now and headquartered in Mumbai, India's financial capital. Our top stories and themes for today. Nervousness in the political theatre could transmit to the stock markets as the second phase of polling ends. No recovery in entry-level cars this year, says Chief of Maruti Suzuki. Global debt at levels not seen since the 1820s, says the World Economic Forum chief. How concerning is the lower turnout levels in phase 1 and 2 of voting with Yashwant Deshmukh of CVoter and India's unusual voter ID problem? How sugar prices are rising because of heat waves and an outlook. Elon Musk skips New Delhi, lands in Beijing 5 days later, hawks Robotaxis now, and energy transition drives big metals and mining deals, trading bets.
This is a core report with Govindraj Ethiraj.
Political nervousness could transmit to the stock markets. Well, it's another holiday-shortened week with markets shut on May 1st or Wednesday. It is my sense that some of the political undercurrents and accompanying nervousness will start manifesting itself in the markets till the results of the general elections are declared on June 4th. Now, you've got to look back. The markets were riding a wave all this while on the back of confidence and determination that there will be continuity with an even stronger mandate. Now, the events of the last few weeks suggest while the mandate may still be in sight, the ruling party itself is a little jittery. But that could also be last-minute jitters, though last minute or not, they will get transmitted to the markets at least till the results are out. Till then, the bet is that strong domestic fund flows will keep the counters ringing. I said domestic and not international because we are seeing consistent outflows there, both in equity and debt, and more on that in a moment. Some positive news on the currency front. The rupee closed at 83 rupees 35 paise on Friday, having risen for the week marginally. But even that marginal rise was its strongest since the week ended February 2nd, and the rupee had hit a record low the week before. And not so positive news, India's foreign exchange reserves fell for a second week to a 6-week low of $640 billion as of April 19th, Reuters said, quoting Reserve Bank of India data. Reserves fell by a little over $8 billion in the last 2 weeks and reflects, among other things, the Reserve Bank's active intervention in the forex market. India is also facing the brunt of overall weakness in Asian currencies. Speaking of which, there's an interesting report from Bank of America which says that it's bearish on a slew of Asian currencies and neutral at best on some. The reason the investment bank ascribes to this is that it is the start of a chaotic era. And that is linked to delays in the US Federal Reserve cutting interest rates and the sustained strength of the US dollar, says Bankam in a report quoted by CNBC. Bankam says it is bearish on the Chinese yuan, South Korean won, Taiwan dollar, Thai baht, and Vietnamese dong. So where does India figure? Well, under Bankam's list of neutral currencies, which include the Indian rupee, along with the Hong Kong dollar, the Indonesian rupiah, the Malaysian ringgit, the Philippine peso, and the Singapore dollar. So nothing in Asia is spared, as you can see. So let's return to the stock markets. The Nifty 50 ended with weekly gains of 2% with a fair bit of ups and downs, though mostly ups and then one down, with Friday breaking a 5-day positive run. The broader factors playing on the markets are the same as before, roughly at least, which include US inflation, geopolitical tensions, interest rates, of course, and then selling by foreign institutional investors right now. The Federal Reserve is meeting this week, but nothing is expected to change, at least in terms of interest rates. Money Control says some 200 BSE-listed companies will announce their fourth quarter and full-year earnings this week, and the markets will also respond to results from ICICI Bank and Maruti amongst those which came over the weekend, and more on those in a moment. US stocks were actually strong on Friday, with all indices including the Dow Jones Industrial Average, S&P 500, and the Nasdaq Composite all ending firmly in the positive. Now let's return to foreign institutional investors. FIIs were net sellers to the tune of 6,300 crores in April. The reasons attributed by the street are the sustained rise in US bond yields and concerns over tweaks in India's tax treaty with Mauritius, something that we've referred to here in the past. Significantly, they're also pulling out of debt, which was generally primed to see not just positive but substantial flows in coming months because of India's inclusion in various bond indices, including the JP Morgan and Bloomberg indices. There were net investments of about 35,000 crores in March and about 1,500 crores in February, according to data with depositories. However, and more interestingly, foreign portfolio investors withdrew something like 10,600 crores from the debt market during this period as well, according to the Business Standard. In the last 3 months, that's before that, Foreign portfolio investors had invested almost 57,000 crores. Now, all of this is debt, and the reversal, therefore, from 57,000 crores positive to about 10,000 crores negative is noteworthy. Banks are doing fine for now. This is results season, and we at the Core Report try and pick a handful every now and then, usually from sectors that send signals on how the broader economy is doing, both at the consumption and investment level. So let's pick two. ICICI Bank, the second largest private bank, reported a better than expected 17% increase in fourth quarter net profit on Saturday, thanks to strong loan growth, though its lending margins shrunk. Standalone net profit, that's excluding subsidiaries, including its broking outfit, among others, beat analyst estimates to rise to a record 10,700 crore rupees in the Jan to March quarter from about 9,100 crore rupees in the same period a year earlier. Now, net interest income, or the difference between interest earned on loans and paid on deposits, increased by 8.1% to 19,000 crores. But net interest margin, which also is a key gauge of profitability, was 4.4%, lower than 4.9% a year earlier and 4.4% in the previous quarter. So last year to now, 4.9% to 4.4%. That's the net interest margin, which is a key gauge of profitability. And all of this is reported by Reuters, which also said that ICICI Bank senior official said that the bank was focused on risk-calibrated operating profit. ICICI Bank's total loans grew about 17% during the quarter, while deposits grew about 19.6% or closer to 20%. Earlier this week, peers Axis Bank and IndusInd Bank also reported strong growth in loans and deposits for the fourth quarter. Now, all banks, as we've been discussing here, are furiously opening new physical branches. So for all the talk on digital banking, including the kind which came under heavy fire from the Reserve Bank of India in the case of Kotak Bank we spoke of last week, ICICI opened 623 branches in the last financial year and will aim to open a similar number of branches this year, an official said. ICICI also pointed out it was focused on building a resilient technology infrastructure, whatever that means today, adding that the bank's IT spend increased to 9.5% of total expenses from 5.6% in 18-19. Given the Reserve Bank of India's crackdowns, I won't be surprised if all banks up their technology spend further, as much as to keep pace with growth as to keep systems capacity ahead of peak demand. So that's good news for IT services companies and hardware companies, I would imagine. Speaking of banks, they may be compelled to slow down their loan growth as deposits are not growing at a similar pace, Standard & Poor's Global Ratings has said, and Business Standard reported in a separate report. In their Asia Pacific 2Q 2024 banking update, S&P Global Ratings officials said that the agency expects the sector's strong credit growth to moderate to 14% in the coming year from 16% last year if deposit growth, especially retail deposits, remains tepid. The official said that there is a deterioration in loan-to-deposit ratio in every bank, with loan growth being 2 to 3 percentage points higher than deposit growth. The official said that she expects banks to bring down their loan growth in 25, that's 24-25, and bring it in line with deposit growth. If banks do not do that, they would be paying higher to get wholesale funding, which would impact profitability. Entry-level car sale recovery distant for now. Entry-level small car sales are not going up, nor are they expected to in the near future. Now, India's biggest car maker, Maruti Suzuki, has reported standalone profits up 48% on year to about 3,800 crores compared with analyst estimates which were actually higher. This is Maruti's first profit miss since the first quarter of fiscal 2023, according to Reuters. So while sales are at record highs, profits per unit or cars sold were lower thanks to discounts, particularly on slow-selling entry-level models. Sales of small cars have been hit, as we've been discussing on the core report, thanks to stress at lower income levels and perhaps inflation. And this is something that's also evident in low-cost housing. A recovery of demand within the small car market will not happen this year and maybe not in 2025, Maruti chairman R.C. Bhargava said in a post-earnings media call, according to Reuters. So Maruti, of course, has been benefiting from, like other auto companies, sales of more expensive sports utility vehicles or SUVs. Maruti's sales revenue grew more than 19% and sales volume increased 13% to 584,000 units or a little more than 500,000. Now, this is for the last quarter. Maruti's total expenses rose 16%, with input costs rising more than 10%, which in turn is linked to its volume increase. Global debt levels at highs last seen in 1820s. Now, this is an interesting, if not worrying, observation. Global debt ratios are nearing 100% and close to levels not seen since the 1820s, and there was a stagflation risk for advanced economies. This was stated by Borje Brende, president of the World Economic Forum, in a speech in Saudi Arabia yesterday. He also told CNBC that global growth estimates for this year is about 3.2%, which is not bad, but it's not what we're used to. The trend growth used to be 4% for decades. He added that there was a risk of a slowdown like that seen in the 1970s in some major economies. He also said, quite interestingly, that we cannot get into a trade war and we still have to trade with each other when asked about avoiding a period of low growth. He said that trade will change and global value chains, there will be some more nearshoring and friendshoring, but we shouldn't lose the baby with the bathwater. He also said that government should consider how to reduce that debt and take the right fiscal measures without getting into a situation where it kicks off a recession. And he also pointed to persistent inflationary pressures. Are low voter turnouts concerning? Close to 1 billion Indians were and are eligible to vote in the 7-phase general election that began on April 19th and concludes on June 1st, with votes set to be counted on June 4th. Now, for a variety of reasons, which we'll come to shortly, voter turnout levels are lower this general election, which is seeing the BJP gunning for a third term after a 10-year reign. Approximate voter turnout data at the end of polling put Friday's turnout at 61%. That's lower than the 65% in the first phase the week before, and 68% in the second phase 5 years ago. Now, there are, of course, 5 more phases to go, but it's also getting warmer or hotter depending where in India you are. And of course, politicians may still convince voters and manage to entice them to leave their houses and go and poll. I reached out to Yashwant Deshmukh, founder of CVoter, the polling and survey company, and I asked him if the turnout numbers were a concern, though, and how does it compare historically?
It is on the lower side, but it is not alarmingly on lower side. I mean, that's what my take is. When I say alarming, say, for example, the first phase, the drop is about 4%, and the second phase, it's about 3%, but it's still not final. So I am assuming that it might be probably only about 2%, not more than that. That's what the final estimate might be even lower. I mean, till the final numbers come in. When I say alarmingly not lower, and I tend to compare it with what happened in 2004, in the urban India, the turnout dropped by almost like 18%. So 18%, when you see something like that, then it goes in kind of a gray area where nobody knows what is happening after that. Currently, I don't think it is in that territory because, first of all, we cannot and we should not read too much into, in a way that is it a pro-incumbent, anti-incumbent, and so on and so forth. Because in the last 20 years, particularly in the 15 years, we have had mandates which were pro-incumbent and still the turnout went dropped and, in that way, and the other side as well. So that should not be the case, number one. Number two, certainly there are elements of heat wave. Certainly there are elements of overconfidence. Certainly there are elements of being disheartened. All three are working in the same direction. So what you can check out that, if the turnouts, in the trackers and in conventional analysis as well, the states where the elections were kind of one-sided, this way or that way, somehow the turnout drop is there. Largely because I believe so that those who are winning, some section of their supporters are getting overconfident. Those who are losing are kind of disheartened and sitting at home that, it won't make much of a difference. So a little bit of that element, both sides. And then if it is a harsh weather, it just gives them an excuse that, yaar garmi thi isliye nahi gaye. So it's just one of those elements. But the states where it is a really, really keen contest that is going on, say, for example, look into West Bengal, the contest is really keen. I was very, very happy with the turnout that we have witnessed in Manipur. That was the one state. We were, all of us were fearing that in the inner Manipur and outer Manipur, both the seats where, we all know that inner Manipur is Meitei dominate and outer is the tribal one. And still in both the places, it is a substantially high, turnout, which which actually gives a very good message in a way that no matter what friction, no matter how much violence, and no matter what our problems are, we still prefer ballot over the bullet. So that is something. If there is not a solution, it is something for the policymakers or people who are getting elected. If they are unable to find a solution, that's their problem. It's not a problem which people are looking at, that they cannot find a solution or they don't believe in democracy at all in that way. So, yeah, I mean, there are different ways to read the turnout, different reasons for that reading the turnout that way. The one place where the turnout has dropped substantially is your state right now, Maharashtra. And I guess that there are valid reasons for that. Because come to think of the voters in Maharashtra, each and every one has been cheated. Not a single voter who has voted for any party in the last election, that party has not dumped their position and gone into complete 180-degree U-turn kind of thing. If an average voter in Maharashtra can probably, give the choicest in Marathi, that I don't want to go out and vote for you buggers. I can understand, I can totally relate with that. So two extremes, I have been saying that two contests are real contests. One contest is West Bengal, another is Maharashtra, where actually there is a good contest on cards. But they have kind of reacted in two different ways on turnout. One, the turnout has gone really good, and one, the turnout has dropped big time. So there are different reasons and logics for that.
Right. So you mentioned 2004 when it dropped 18%. What was the reason for the drop?
In 2004, the urban India, the two reasons that was cited, number one was complacency, largely, and the urban India was supposed to be the BJP stronghold. And if you remember, one big issue of 2004 election was also the complete breakdown of communication between the BJP and their mother organization, RSS. And RSS did not work for the BJP in 2004. That's a well-established fact now, in fact. Second thing, which was a unique to observe at that point of time, was polling coinciding with the extended weekends. So many people, middle class, actually uh, went out to holiday. That's what was cited in 2004 as one of the reasons. I doubt that the same thing is happening this time, because from the numbers perspective, if there are high number of tourists reported in the most popular tourist destinations, then we might be looking into that. But so far, I have not seen any report of that line in any of the media house, any of the print or digital or.
Right. And we've got several phases to go still. So that's uh, so let me come to another point. So we have registered voters and actual voters. So what should we usually expect? I know 60% means 60% of registered voters have voted. But within that, are there shifts, or are there habitual voters who will always vote in every election in their active lifetimes? Or does that keep shifting around? I mean, just a sense.
Well, there are wild swings as far as the swing between Lok Sabha and Vidhan Sabha voting options are concerned. We have seen that. I mean, that's why I coined that as a split vote, that, this goes here and this goes there. In the last particularly 10 years, we haven't seen much of the wild swing between one set of the same election, like Vidhan Sabha to Vidhan Sabha, Lok Sabha to Lok Sabha, in that way. That gives us the idea that people are largely kind of stable in whichever way they are voting, and they are consistently voting. It is unlikely that a hardcore BJP voter will out of the blue swing to the Congress, and hardcore Congress voter would out of the blue swing to the BJP. What happens is that relative turnout that goes up and down. So, say for example, in Madhya Pradesh, like almost 9 out of 10 BJP voter went to the booth, and Congress 6 or 7 out of 10 went to the booth. So that kind of relativity that makes this look like swing, but it is not really the actual swing. Swing from A to B is not happening. But statistically, when you compare the two elections, it looks like this vote went up, this vote went down. But it has more to do with the relative turnout of with their fixed vote basis, rather than the actual swing from party A to party B, or the other way around. However, one interesting data which CSDS has reported, and even in our surveys we have always tried to figure out, almost a quarter of them make up their mind in the last couple of weeks of voting. That's a significant number. That includes big number of young voters, first time voters as well. We have been discussing that. That has a lot to do with the candidate selection. That has a lot to do with the caste arithmetics and things like that. So a quarter would always be there to go out to vote. And I believe this is also the same quarter which does not go out to vote. And they say that we will be deciding later. A drop from that perspective is largely in two conditions. One, that I want to vote for Govind, but somehow Govind has no chance of winning whatsoever. So I might sit home. Or I am really upset with Govind, but come what may, I will not really vote for Govind's opponent. So if I am upset, then sitting at home is also mark of my protest in that way. But eventually what happens is that all thing counted in, it shows into final numbers that, okay, the numbers have kind of dropped when compared to the 5 years back.
Your study of first time voters, which threw up a lot of interesting behavioral insights, are you able to correlate any of those with what we are seeing in these two phases of elections or early days yet?
There is one distinct number that is coming up, is that the number of voters, first time voters who got registered to vote, that has dropped. Now, that is alarming. Alarming from the perspective either they are not so keen to vote, or they are not really enthused or excited with the options that they are coming to vote. However, there is one more reason, probable reason, that I would like to actually conduct a survey and understand in numbers how it is working out. Govin, in your and my generation, till 10 years back, I believe, voter ID card for almost 2 to 3 decades was the default identity card in India. Everybody wanted to have one because that is the card which worked everywhere. Right. But in the last 15 years, ever since the Aadhaar thing came in, I think Aadhaar has replaced voter ID card as the default identity card of India. So there is no pressure on the younger generation to get the voter ID card made, like the pressure of our generation used to take. 18 ke ho gaye, your first thing you have to do to get the voter ID card made, because after that, that is the card from railway reservation to driving test to everything. That is where it is. They think that we were supposed to use as default. I think Aadhaar has taken that shine away from the voter ID card. And that could also be one of the reasons that youngsters are not really keen to get themselves registered to vote. And if they are not registered to vote in a bigger number, then they are not going to vote in a bigger number. It's natural fallout of that entire process.
That's a fascinating point, and we'll pick this up at a later date, maybe after elections. Yes, thank you so much for joining me, and from Sydney.
Thank you.
Sugar prices are rising thanks to demand and heat waves. India's sugar consumption this year is set to hit a record high as demand during the peak summer season gets a further boost from above normal heat waves, of which more are being declared as I speak. Higher consumption would lift local prices and boost margins of sugar producers. Sugar consumption in India for the 22-23 marketing year, which ended on September 30th, was about 28 million tons, according to Reuters. Higher demand has already begun pushing up sugar prices. So how are heat waves likely to impact sugar prices and agri crops in general, and what could be different this year? I reached out to Rahil Shaikh, Managing Director of MEIR Commodities, an agro-commodity trading firm based in Mumbai which specializes in sugar, and I began by asking him how he was seeing the impact of heat waves on the crop and his outlook ahead.
Just referring to India right now, I think the domestic prices are around 35,500 to 37,000 range between Maharashtra and UP. So say 38,000 rupees for UP and 35,500 for Maharashtra. The reason for it is this rise in the price by about 3-4% recently is mainly driven by the off-season and in-season of any commodity. So the sugarcane harvesting just got completed in the month of March, early April. So technically, the mills have shut down now. The pressure to pay to the farmers are less. So the withholding power comes into the mill. So this is one of the reasons. The other is demand is also increasing. You see, our country is increasing. The GDP is about 6.5%. So we generally used to calculate 0.5%, 1%. consumption growth. But I think the weather conditions currently are forcing us to have probably more cold drinks. I mean, the consumer pattern of spending the money is also changing. So if you recently go through the survey of the consumer spending, it shows that there is tendency to passing through consumption of sugar more than the staple food. So this is what we have picked up, though the little bit of more study needs to be done in that. I mean, packaged food is increasing if you look at anywhere. I think even a pizza bread on a bottom would have about 1 gram of sugar somewhere. So I'm not sure. I mean, we really have to go in detailing about it. But I think the consumption pattern from the point of view of our population growth and our GDP growth, if we are exporting more commodities, I mean, more packaged food into Africa, then we are technically exporting wheat and rice and sugar. So I think the consumption of this product is increasing. Our estimate is that consumption would be anywhere closer to around 29.7 to 30 million tons. This is the record consumption for this year. The government have released about 2.5 million tons for this month. And if you multiply that by 12, by any formula, it will be 30 million tons. So that's how we are looking at the consumption.
Okay. Now, so that was sugar. How are you looking at broader commodities, agricultural commodities that you're dealing with and you're following, particularly in the context of climate and heat waves?
I personally feel that, firstly, talking from my own subject, which is sugarcane, so we are monitoring the reservoir levels. Currently, the water reservoir levels in Maharashtra is quite low. Across the country, it's quite low. Sugarcane is a strong crop. I mean, it can bear. Unlike human, it is much better to face these heat. I think it will survive unless regions like Sangli is somehow or the other getting rains. Kolhapur is getting rains. So the rains which is needed for the crop to continue its trend, it's getting. So sugarcane, I per se don't see much of change in the area. But I think if the rains does not arrive around the 7th of June, then I think we would be facing a challenge from the sugarcane side, is that we would start to drop in the agricultural heat. But I think we have to see how the monsoon pans up and also the pre-monsoon shower as well. So I think from sugarcane perspective, we are safe. But I think if you look at other crop, it will be quite impactful on other crop like pulses because they need timely rains. I think wheat harvesting is going on, and you are hearing that the wheat arrivals at the mandis are quite low currently. I believe around 32 million tons have been acquired by the government versus 37. So I think those impacts are seen currently on the other crops, which are not too strong. But I think it's too early days. I think the heat wave just started off.
So you're saying that to understand whether the heat wave is having an impact on agricultural commodities and prices is a little early right now, and maybe we should look at it a little later.
Correct, because I think now we are at the harvesting time of most of the crop. The monsoon is the time when we should start to see what kind of impact does the crop is having. But I think sugarcane will not have much of impact because it is a 14 to 18-month crop. So it is the continuation of that crop which is facing the heat now and then going into monsoon. Whereas other crop will be sown during the time of monsoon.
When you started, you said that you were looking at in the Indian market. And what's the world market looking like right now for sugar?
World market is a Brazilian market currently. I mean, 90% of the world is dependent on Brazil, which is quite dangerous as far as one commodity is concerned. But Brazil is going to break all the records again. We believe Brazil will have about 44 million ton of sugar, which they will produce. And the world will be supplied only by the Brazilians. India will continue to be out. Thailand will have about whatever it gives to the world. It will have about that much of commodity. I think about 500,000 tons more from Thailand, 300 to 400,000 more from European Union, and Pakistan would come in to give world about 500,000 tons. But that's not going to suffice with the world. But I think if any shock comes from Brazil, then we don't have shock absorber in the world market. So we need to follow the Brazil macros, Brazil weather. So Brazil production started 1st April 2024 for the current season. So we should follow Brazil. If Brazil does anything, any anomaly in Brazil, logistics, truck strike, political changes, rains, then this market can be higher. But currently the band looks like between 19 and 23 per pound in the New York.
Thank you so much for joining me.
Thank you.
Robotaxis, anyone? Last week, Tesla CEO Elon Musk said that he would not visit India for a much-planned and trumpeted visit to meet Prime Minister Narendra Modi and announce, according to reports, a $2 to $3 billion investment because he had very heavy Tesla obligations. Exactly 5 days later, if I'm counting it right, he landed in Beijing in his private jet in what's being reported by Reuters as a surprise visit. Musk is expected to meet senior officials in China to discuss the rollout of full self-driving software and permission to transfer data overseas, according to Reuters. Tesla had rolled out full self-driving, or FSD, the most autonomous version of its autopilot software 4 years ago, but has yet to make it available in China, the second largest market globally, despite customers urging it to do so. It's now being widely reported that Tesla wants to focus on robotaxis because, among other things, it's a good value booster for the stock price. Musk said last week Tesla would introduce new, cheaper models using its current EV platforms and production lines and would also offer a new robo-taxi with self-driving technology by August 8th. Now, Tesla shares are down almost a third since the start of the year. So, what all of this means for India, or does not, is not clear. Unless India wants to make a pitch for autonomous cars. Now, China's roads can be chaotic too, though maybe less so compared to India, at least proportionately. Either way, all their cars and their neural networks, that's the robotaxis, need to be or should be trained on roads like these. Now, all of this does not seem imminent in India, though. Earlier this month, Tesla had said it would lay off 10% of its global workforce against falling sales. And Reuters also said that Tesla has sold more than 1.7 million cars in China, so therefore it's a big market, and it entered that market a decade ago. And the Shanghai factory is also the largest globally. Musk's visit also coincides with the Beijing Auto Show, which opened last week and ends on May 4th. According to Reuters, General Motors CEO Mary Barra also made an unannounced visit to the Beijing Auto Show. This does seem like China is turning on the pressure on top automotive executives who want to stay connected with that country, arguably the most dynamic EV market in the world. Energy transition drives big metal and mining deals and trading bets. There is action in the metals and mining space after a while, and energy transition is driving it. BHP Group has proposed a takeover of Anglo American in a $39 billion deal that would create the world's largest copper producer, even as it triggers a shakeup of a size not seen in over a decade, according to Bloomberg. Now, that proposal has got rejected for now, but will be most likely revised, and more on that later. But copper is regaining its luster also because it has a key role in energy transition across the world. Obviously, prices of copper have been rising. And a tie-up with Anglo would give BHP roughly 10% of global copper mine supply ahead of an expected shortage that many market watchers have predicted will send prices shooting up. BHP is apparently now considering making an improved proposal for Anglo American, according to people quoted by Bloomberg. Last year, BHP bought copper producer OZ Minerals for about $6.4 billion in its first major purchase in years, but has otherwise been mostly focused on selling assets such as oil, gas, and coal. Elsewhere, some of the world's biggest energy trading companies are returning to metals, apparently years after getting burnt in the notoriously difficult markets, again according to Bloomberg. So the big trading firms are building out their metals teams as they look to deploy capital generated by record profits and are hunting for the best talent for this. And this is happening as forecasters are turning increasingly bullish on copper, aluminum, and other metals. And many commodities houses are also seeing strong links between metals usage and power markets. The metals trading space, according to Bloomberg, is dominated by companies like Glencore and Trafigura Group. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.